Hey everybody, welcome. We are going to get started here in a few minutes. Really excited for this webinar, guys, as you should be. I think a lot of you are probably coming in early because you are aware we are having a guest feature, a guest host on our webinar this morning. Specifically, we're going to be covering the compass and a new approach to the compass that I don't think a lot of you guys have had access to. So really excited. We're going to get going here in a few minutes. Just, hang with us. We're not let more people file in, and I want to get things set up so we can present this to you guys here soon. So yeah, just hang tight a few more minutes, guys. Alrighty, well, welcome everybody. Welcome back to our Forex Fridays. Really glad to have you guys all on. We have a huge amount of participants this morning, which we're really excited about. And again, guys, we have a guest host here this morning, one of the top leaders within economy. Really excited to have her on. She's going to go over, she's going to cover some topics specifically regarding the compass. That she's developed, and she's been having a lot of success with, guys, and we're really excited to share this with you because I know, just myself hosting these Forex Fridays every Friday, there's a huge demand for the compass, and we go over our examples and go over, my strategy and my approach to how to execute on the compass trades. And so we love having, other people on here. And again, Catalina, one of the top leaders within the entire company. So super grateful to have her on here with us. And again, go over what she's been doing, how she's been seeing success within the markets, utilizing the compass tool, and being able to translate that to you guys, and so you guys can use this and have this as well in your arsenal, guys. So really excited. I'm going to actually toss this over to Catalina here, and she's going to take over the webinar from here on out. So please, give her her respect, guys. Save a lot of the questions for afterwards if you can, because it does sometimes get distracting. If you do have questions, just make sure to put them in the Q&A section and not the chat. So again, guys, Catalina, welcome. Thank you for hopping on. We appreciate you spending your time and hopping on here with us on Friday. We know how Fridays are for most people, and being able to just give value to a huge amount. We have I think 117 participants this morning, so that's more than normal. So I think they were definitely anticipating you on here this morning.
Awesome. Thank you, everyone. Market Hackers community, EA Economy. For me is an honor to do this call for you guys and show what's been working for me and what's been working in Latin America, particularly. Compass has been actually one of my favorite products, more than the software, but to each of its kind. Software is great, but for those of you who really want to develop that skill set and want to learn how to trade and start manually trading, the compass is a great tool to get started on. So I actually created a PDF for you guys. I'm going to share my screen. And great. Are you seeing that?
Yeah, looks good.
Perfect, perfect. So, all right, guys, let's get into it. Awesome. So first, before I get into Compass, I do want to go into some basics. First off, hours and sessions. Let's talk about the sessions. For those of you who don't know, Forex is broken down into sessions. Particularly what I'm seeing the Compass capitalizes the best out of is this combined session of both New York and London. So you're seeing that in this overlap, and as you can see here, we have the schedule of the different sessions. But if you're up in the morning Eastern time, this is where the Compass is probably releasing its best trades, I would say. Compass is releasing about 30 trades a day. Doesn't mean they were designed for you to all of them. So over what you should look at, what is considered a good trade setup, what is a trade that I would walk away from. So having this in mind, sessions are very important. You know, anywhere between 3 a.m. and 5 p.m. are probably the most movement in the market, especially the combined overlap session. So we'll be trading with the Compass 28 major pairs and gold. So these are some of the pairs that you'll see in combination, and gold, of course, as well. Gold particularly, I do not feel comfortable with smaller accounts, maybe taking some of these gold trades, because gold can move anywhere, you know, between 100, 200, 300 pips in a 1 hour span. So definitely probably stick to the major pairs. So let's talk about these wedges and what they usually and typically do. Usually when the Compass, and you'll find these trade alerts in the Telegram. You can access the Telegram in your back office. So you'll see your back office right here. You'll see every week they update the Telegram chat. So definitely plug into that. So the trades will, the wedges, usually when we see a descending wedge, typically what happens is we buy. And when you see an ascending wedge, typically what happens is we sell. So what we're doing is we're buying low, we're selling high, or vice versa. Okay, so this is typical. Wedges is one of the most accurate trade patterns you can find in the market. And with this AI trade alert system, we're eliminating human error. This is not a human sending out alerts. This is AI sending out alerts. So have in mind that these patterns usually do respect these sort of confirmations. So I have a little cheat sheet here, and I will be sharing this PDF with you guys after the call, but typically this is what we're seeing. And you know, out of every 10 trades, 7 are going our way, and it's following and respecting these patterns. So very important to get familiar with these patterns. Just some basics. What is a pip? It's a unit of measurement. You know, fourth pip counts the actual value in difference of the two currencies. So make sure you know that we're looking at the fourth pip. And for JPY and gold, you're looking at the second place decimal to count your pips, okay? Let me give you an example. If our entry price was at 1.1966 and you're going to sell 5 pips, you would count the fourth decimal place, as you can see right here. So it would be 66, 65, 64, 63, 62. For those of you manually counting the pips, I'm going to show you some really cool tools and resources that I use with tradingview.com. So you don't have to manually do this, but I do like to explain it because it's always a question that I get. What is a pip? So here you go. If you're going to buy 4 pips, then you would add on the fourth decimal, you would add, so it'd be 66, 67, 68, 69. Same thing with your stop loss. This is how you would come up with these numbers. So for your lot sizes is the amount of money you are risking to make a profit. So it's basically the amount of money you're willing to, it's the amount of money you're going to make on that particular amount of pips that you catch. So 0.01, you'd be catching 10 cents a pip, and so forth, right? So 0.1, $1 a pip, and so forth. So this is just a little cheat sheet for you guys, so you can have that there. Okay, so the trade plan, I want to go over a little trade plan that I made with an account of $300. So one of the rules with the Compass is I never take more than 5 trades at once. And also per trade, I'm risking 5% on my account. So this is just a formula based on this amount, 300. So the way that I do the formula is, what is 5% of 300? It's $15. Assuming that we're going to take 10 pips, I would divide those $15 by 10 pips. What does that give me? $1.50 per pip. So that means to me that I'm going to trade a lot size of 0.15, because 0.15 is $1.50 per pip. So if you trade $1.50 per pip, 0.15, 10 pips, you're going to make $15 on that transaction. So let's say you started with a $300 account, and in a day they send out 30 alerts, but you took the best 10 alerts they sent out that day. You can essentially, considering the fact, and of course this is Forex, guys, of course we lose in some trades, but considering the fact that let's say we don't take any losses and we took 10 trades straight, using this formula, you can grow your account about 50-60%. Considering no losses, which is never the case, using this trade formula, 10 positions in a row. So basically I'm compounding 5% every single time I take a trade, right? So, you can essentially grow your account 50-60% if you're accurate with this. And of course, time will tell. This is a skill set that does take time to develop. This is something that I always tell people, practice at least, a month on demo before you go live. But this formula has worked great for me. And of course, don't over leverage. I usually just try to stay within 5 positions and not take anything more than that. Candlesticks. I have a little cheat sheet for you guys here. Candlesticks are very important to learn how to read Japanese candlesticks. And I recommend, there's a very good app on the Apple Store and it's free. It's called JPC, Japanese Candlestick, or also the Japanese Candlestick Bible. It's out there. You can also read that. Candlesticks is like learning how to read music. If you know how to read candlesticks, you're going to be able to forecast the future better. So in MetaTrader 4, usually we're looking at black and clear candlesticks, and on TradingView we're usually looking at green and red ones. But basically, obviously, when the candlesticks are going up, obviously the market's buying, and when the candlesticks start going in the trend of a downward direction, obviously the market's selling, because we make money as traders. Even though the market's going up, we make money. Even though the market's going down, we still make money. So get familiar with candlesticks. They really say a lot about what the market's about to do. This is going to be one of the key factors here. So this is a very good cheat sheet for you guys. Get familiar with it. So let's talk about now the actual compass. So I just wanted to overview some basics with you guys. You could use any demo account you want, any broker you want, but particularly myself, I'm using Trader's Way because it's giving me that 1,000 leverage. Most other US brokers will probably be 500 or 200. So I'm looking at a leverage of 1,000. You could start with Compass with anywhere between $100 and above. I personally like 300 to start as a minimum. Demo account, ECN account. So go ahead and create a demo. The next step will be you'll get the alert. So once you get this alert on your phone, the first thing I do is I go to tradingview.com. Now in the EA Economy back office training, they are drawing the wedges on MetaTrader for the terminal, the actual terminal. Personally, this is just a personal preference. I'm liking to draw my wedges on tradingview.com just because it's color coordinated. You can also download the app. It's free. Create an account. It has indicators. It's just more visually pleasing for me and more aesthetic for my eyes. And a lot of times I put this note in here because a lot of times people will tell me, oh, my wedges aren't coming out, good. They're not, I don't see the wedge. And a lot of times it's because you're not in the correct universal time zone. So let me pull up tradingview.com. A lot of you sometimes are not in the correct time zone. So make sure you are in your correct time zone, because if you're not in your correct time zone, you're not gonna be getting these wedges accurately, okay? The same thing for Forex factoring, where we check our news events. Make sure you are in the correct time zone, okay? Otherwise, you're gonna read these incorrectly and you're gonna be lost. So once you get the trade, and I will be doing a couple examples after I go over the rules and the confirmations that I look for at the end. Make sure you're in the correct universal time zone. Make sure you're looking at all your pairs in the 15-minute chart. I also like to refer to the 4-hour chart just to look at my daily trend, and I'll explain later on why. It's very important to also understand where the daily trend is going. And then we draw the wedge. And then after we draw the wedge, we wait for the candlestick to break. Very simple. These are the steps. Now let me go over the rules and the exceptions, because we don't take all trades, and the confirmations that I look for. I kind of call this the 5 pip and dip strategy. I don't always take 10 pips, and I'll show you exactly what I look at to determine the amount of pips I'm gonna take. So here I have an example of a wedge that we drew out. And so I personally like to draw a vertical line at the time the trade was called. Just visually, you're gonna get a more accurate entry point, a more accurate stop loss, take profit if you draw these out, especially if you're new and you've never traded before. Draw them out. I've already gotten to the point where I don't really necessarily need to draw the vertical line or draw the outstanding line of the wedge. I just draw the trend of the wedge. But for those of you that are new, just always get in the habit of doing it, because it's really gonna visually show you where the market is going and you just can't get lost. Then what you do is, if the alert calls out a descending or ascending wedge, first draw out that trend they're calling out. Then I draw the other line. The other line is not as important, but I do draw it anyways. And then wait for the candlestick to break above or below. And so if it breaks above, obviously we buy. If it breaks below, we sell. And we already established that usually, it's not always, usually when it's ascending, it sells, it's descending, it buys, usually. But our confirmations are what is gonna give us the green light to sell or buy, or are we gonna walk away? This is the kind of decisions we're gonna teach you how to make with these rules. What is a take profit? A take profit is the amount of money you intend to make on a trade. And the stop loss is the amount of money you're willing to lose. These are parameters we set for ourselves so that, and me personally, I don't recommend this for new people. I don't use stop losses, especially on trades where my daily trend is in my favor, but that's just me. But we should be using them. For those of you who are a little bit more advanced, sometimes using the stop loss can actually go against you in some particular cases. So, once you start seeing these patterns and get familiar, your eyes get familiar with these things, you'll be able to make better decisions and discretions on whether to use one or not. But, just personally, I don't. Everyone that's new or using this for the first time, please use it. And then a trailing stop loss. Trailing stop loss, once you're in profits, get in the habit of moving that stop loss into your green zone. That way you can say you never lost, like you're in your profit zone regardless of what happens. So if you have the time, and you should be, when you're taking these trades, they happen really quick. So you're actually taking them live on market execution. You're watching this happen right before your eyes. So I wouldn't walk away if you're not using a stop loss. This is not something that you walk away from. You're watching this in real time. Okay, so how do you take these trades on your phone? Once you have determined if it's a buy or sell, and we're gonna do some examples at the end of this call, you're gonna open your MetaTrader 4 app, you're gonna go into your quotes, you're gonna find the pair that you're trading, you're going to click trade, and you want to be quick because this is time sensitive. And you want to plug in your lot size. We already determined with the formula what kind of lot size you're going to use based on the amount of equity you have in your account, the stop loss, and the take profit. Usually what I do, I just go in for my pair, I buy and sell really quick. I go back into the trade, I modify it, and then I add my stop loss and my take profit. Because every minute you wait is money you're losing potentially. It's money you're not making. So I just go in quick, it's time sensitive, and then I go in, I modify my stop loss and my take profit. Okay. Now let's talk about the strategy, the rules, and the confirmation. Super important, guys. Super, super important. And I would print this out. And when you're trading, I would keep these rules next to you because they really do apply. So we're looking for 3 to 15 pips, and our take profit, we're looking for 3 to 15 pips. Now, in the back office, I just want to clarify this. In the trainings, it does say 10 pips. It's not always 10 pips. It's going to be your last high or your last low, which happens to be your last support or your last resistance. I'm going to show you guys how to determine that. So, anywhere, and I'm typically, looking for my 5 pips. I try not to, let's not get greedy, because sometimes going in for those 15 pips, it might stop you out sooner or later, or you might not reach those pips, and then the trade kind of just sat there, and then you didn't do anything with it, and you can lose. It will hit your stop loss, or maybe you'll make money, but it would be a gamble. So really, my guideline is your last high, your last low. Your stop loss should be set to your last previous high or your last previous low. Advanced traders only. I personally, I already explained this to you guys. I'm not using the stop loss for just the trades that are being traded in my favor. So if the alert is telling me it's a buy and my daily is a buy, it's a bearish candle. I'm sorry, a bullish candle, then I feel safe not using that stop loss. So again, that's for advanced traders. Everyone else, please use that stop loss. It's a protection for yourself. Okay, do not trade pairs if a news event is going on, and you want to refer to forexfactory.com. And Forex Factory, what you want to look out for is these red folders. So if you're getting called out a trade at 4 a.m. on the euro, and you see there's a red docket, there's a red folder on the docket, then I would stay away from that pair. I wouldn't trade it. So it's the AI is very accurate, and it's eliminating human error. It's algorithm powered, but it doesn't trade news events. It wasn't engineered. It wasn't designed for that. So we definitely do want to, like on a day like today, I would stay away from the euros. I would stay away from the GBPs in the morning hours during London and New York session. So that's the kind of things you want to look for and have an eye out. So when I'm trading, I have my Forex Factory out, and I have my trading view out at all times, and I'm referencing all my rules as well at the same time. Once you're in profits, add that trailing stop loss. Get in the habit of doing that. I even forget to do it sometimes, but if you do, you're always in profits. You're just always in profits. So get in the habit of doing that. After the breakout of a candlestick, look for 3 confirmations, and I'm going to go over those indicators that I use to confirm my trades. So even though the alert is telling me, yes, it's a sell, I still triple confirm that trade. I don't go always in on every single trade. I still confirm it for myself, and I use tradingview.com. Some people you can use MetaTrader for. It's personal preference. I just like to use the color coordination, and the tools are very resourceful to count pips and things like that. So do not take more than 5 positions at once. And we already talked about that, 5% of your account per position. So, that would be maybe 25% of the account that could possibly be used in equity at that one moment in time. And I'm not really seeing 5 trades being sent out at one same specific time, but just have that in mind because you don't want to over leverage your account. And you never, I mean, this for me is like already orange zone. You don't want to go over that 1,000, under that 1,000 percentage in your margin level, because then you're, you know, in a dangerous zone as far as your equity is concerned. Trades are time sensitive. Once a trade is called out, you only have a certain amount of time to take that trade before it expires. So, you know, enter immediately, market execution, and then you want to modify your profit, your take profit, and your stop loss. Not every trade alert is meant to be taken. I walk away if the wedge doesn't look good, if it just aesthetically doesn't look clear to me, and if it doesn't look clean or good or clean cut, I just walk away. And I will walk away gladly, because I rather take the 10 best trades out of 30 trades than just randomly take any trades. You want to be selective. And this is an example of another trade I wouldn't take. If I see consolidation and I draw my wedge out and I'm not really seeing wedge and it's consolidated, meaning it's all going sideways, away, and I gladly walk away, because I only care to take the best trades of that day. I don't care to take all of them. That's not the trick. Practice on demo. Do not go live until you flip your account 3 times. Until you've flipped your account 3 times, I don't recommend going live. This is a skill set that does take practice. And obviously a disclaimer, past performance is not indicative of future results. This is not a solicitation to invest. Only trade money you can afford to lose. And lastly, super important, I want to talk about risk management tolerance. And I always ask myself this question, and I have to, and I like physically ask myself, if this trade goes south, can my account handle the loss? Ask yourself. Because if you can't, and you can't answer that, then you're over leveraging yourself. Your lot size is too big, or you don't know what you're doing and you shouldn't be live yet. So always ask yourself, this is just risk management, guys. What is your tolerance? And this is something you'll only be able to measure over a period of time with practicing this tool. Over a period of time, you'll be able to realize what is your risk management based on your equity and how much is your starting capital and how much you're willing to lose, how much you're willing to make per trade. So let's get into it. I have a couple trades that went our way this morning, and I drew them out for you guys, and I will draw them out again with you. So these are the rules. I will make this available to you guys today. And so let's get into it. Let's draw some wedges. So first one we're going to look at was USD CAD. It was called out this morning and it went our way. So I'm going to zoom in a little bit, and these are just some of the indicators that I'm using. I am using Bollinger Bands, and on tradingview.com, get familiar with it, play with it a little bit. You'll see these indicators here, okay? I'm using Bollinger Bands. I'm using also RSI and Stochastic, and I reference some other ones, EMA, and some other ones, but the most 3 important ones would be the RSI, the Stochastic, and the Bollinger Bands. And my favorite one is Bollinger Bands. That pretty much gives me a really nice confirmation as to if I should take the trade or not. It's pretty accurate most of the time, but since we're combining 3 confirmations, then we're going to be able to make better decisions like that. So let me go ahead and erase all this, and I'd like to analyze this with you guys from scratch. So we received an alert. We're looking at it in the 15-minute chart always. I placed my vertical line, and you'll see these tools are very cool. That's why I like using TradingView. I'm going to use a vertical line at the time the trade was called. So the trade was called at 3:15 a.m. And that's my first step. Okay. Then they said it was a descending wedge. So I just care to draw my trend line, the descending trend line. I already saw it. So there we go. It's right there. So let me zoom in, and you kind of just want it to hover over the candlesticks just like that. And I care about here, this time frame right here. Right now, if you would have taken this in real time, none of this would be here right now, okay? So we draw that, then I draw the bottom, which is not super important, but, and the wedge is not always perfect. It's not always perfect. So, you know, try to be as close as you can. So that's the wedge. And so you have to have a little patience, and as you draw this wedge, we're waiting for that breakout. So look, it did break out. It broke out. So now I use this tool over here, and since we're buying, I'm going to use the long position tool. And I'm going to make it a little, I like using this tool because it literally does all the work for me. And I'm going to place it where I'm going to go in for my buy. So my buy would be approximately right there. Okay. And so that would be my buy. And I like this tool because now I'm going to show you how to come up with your take profit and your stop loss. So our stop loss would be our last low. So our last low, where's our last low? Right here. That's our last low. Our last low was right there. So I'm going to take that stop loss right here. And this is just me. I like to color coordinate and label it. So I have my stop loss. Now, and have in mind, when this happens in real time, you already went in for your buy. Once you go in for your buy, then go back in, modify, and add this stop loss, add your take profit. My last high was right here. Right here. My last high was right here. So now this becomes my take profit. This becomes my take profit. This is my last high. I'm going to put a little arrow right here. Okay. And so now that I've determined that, okay. So now I use this ruler to count my pips. And whoever went in this trade made 8 pips. Whoever went in this trade made a profit of 8 pips. So let me go over this again. Step 1, we put in the vertical line at the time the trade was called. Since we already know that we're going in for a buy, my stop loss will be my last high. And my take profit will be my last low. Simple like that. You can write that down too, guys. Because pretty much that's the rule I go by every single time. And whoever went in that, how much pips did I say? 8 pips almost. And they say 50 pips a day takes the 9 to 5 away. So let me just put into perspective some numbers for you guys. If there's 30 alerts a day and each alert is potentially 10 pips, we're looking at 300 pips a day. If you only focused on catching 50 of those 300 pips in a day, which is super possible, you can literally take your 9 to 5 away. Like if you really master this skill set, and that's why we really want to place emphasis on this tool, and all of you have access to this, and definitely take advantage of the resources that are being given to you guys. I'm going to do a couple more examples. And so I confirm also, let's confirm with the Bollinger Bands. So I knew that was gonna go in for a buy, and I know it looks a lot of lines in there, but let me see if I can take off. Let me take off these temporarily just to make it more clear. The reason I know it was gonna go in for a buy is because this indicator, Bollinger Band, if the candlestick crosses the bottom of the blue line, we're looking for a buy usually to my next support and resistance. So, you know, just by seeing this right here, I knew that this potentially would have gone in for a buy. And you know, it did because it pretty much respected that. So that's just one of the confirmations that I use. Let's go over, and also let me go over the pips. So 8 pips, if you would have traded 0.01 on 8 pips, you would have made 80 cents. Okay, you would have made 80 cents. If you would have traded 0.1, you would have made $8 on this one transaction. 0.5, we're looking at $40. Okay, this starts getting really interesting. And of course, your lot size, like we discussed earlier, is based on your equity. There's a formula to this. So, you know, make sure you're not over leveraging your account. But if you're taking standards on this, you're already looking at an $80 transaction right there. So there's a lot of potential here on making, you know, unlimited amounts of money if you just learn these formulas and learn how to draw these wedges. This strategy is very, very simple. So, and I think there's some people asking questions. Okay, I'll go over the questions at the end. But good questions. I just saw some of them. So, you know, just on this one transaction, you could have made these amounts of money on this one transaction. So let's go over another one that was sent out earlier today. NZD, USD, and actually NZD, USD. This is a trade that hasn't happened yet and that I drew out. So we can look at that one. I'll come back to that one. Earlier today, whoever got in this transaction made money as well. So let's draw it out. This was just a couple hours ago. So they sent out a trade alert on AUD USD at 9:45 a.m. So I drew that vertical line at 9:45 a.m. And then I came in, I used my trend line, and I drew my ascending wedge because that's what they called out. So let's go ahead. Let me zoom in on this for you guys. And then I draw my outstanding one, which is not super important, and it doesn't need to be perfect, but as long as the trend line is correctly drawn, that's what counts. So I like to make sure they are hovering the candlestick at that particular time. Okay, so it broke out below. So what did we say about wedges that break below? An ascending wedge usually breaks below, right? So what did it do? It sold. It respected that rule. So I'm going to come in here and use my short position tool. This is where I would have come in to sell, right here at that candlestick. I would have come in right here at that breakout. That would have been my entry. My entry, let me draw that entry for you. My entry would have been exactly right here, and I'm gonna label it entry. Boom. That would have been your entry. You go in as a market execution sell, then you go back in on your phone, you modify, and you gotta be quick because it's time sensitive. We're gonna modify, we're gonna add our take profit and our stop loss. So I'm gonna use this tool to come up with my take profit. My take profit is my last low. Where is my last low? Have in mind that none of this has happened yet while you're drawing this. My last low was this peak right here. And I like to actually sometimes, I even like to use this line graph. I switch over sometimes between the candles to the lines to get that visual of my last low. And my last low is right here. This is my last low, and this would be my take profit. Boom, that's my take profit. Whoever went in this trade this morning made 4.5 pips, not bad. 4.5 pips. Now, if you would have gone in for 5, 10 pips, you wouldn't have made it. So it doesn't always, it's not always exactly 10 pips. It's not like that. It's gonna be your last high or last low. And then my last high, so let's draw this out. So this would have been my last high, my last low, and this would have been my last high right here. So that means my stop loss, I would have put it there. That's where I would have put my stop loss. And don't get intimidated by all these colors and stuff. It's just practice. It really is. It's like learning how to play a video game. Trust me, your entries are going to be so accurate, and your take profits and your stop losses are going to be so accurate if you use these tools. It's pretty much to the dot, because sometimes when you like just do it by eye, even 2 pips off can really make you lose the trade. So, and then this is going to be our stop loss. Boom. So that's our stop loss. So let me go back to our candlesticks. And what happened? It respected it. It hit take profit. It hit take profit. So let me write notes on this here. And then Bollinger Bands. Boom. Bollinger Bands confirmed it, because here it hit the top of the band. So I'm expecting for it to eventually hit the bottom of the band again. So my wedge is here, so it has nowhere else to go than just down. It's just one of my confirmations. I like to toggle between all the indicators, because I need 3. I need at least 3 confirmations. It could be Bollinger Band, it could be RSI, it could be stochastic, it could be the wedge. Just any of the 3 combined. 2, even sometimes 2, I'll take it. Because trading is 10% skill set, 80% psychology, 90% psychology. So if you start understanding the psychology of the candlesticks and also learn how to read the candlesticks, you'll be able to see where you take or where you walk away. So I'm gonna do one more example after this, but let me write some notes in here for you. So since this one was a different example than the last one we bought, this one we sold. So when we sell, we have an ascending wedge. It usually sells. And then the take profit would usually be the last low, and my stop loss would be my last high. And so, boom, I use my ruler. And so far, whoever got in the market this morning, you already made like 15 pips. So let's continue. So they called out another one, USD CHF this morning, and boom, this was just recently, and it all went in our favor. So let's draw this out from scratch with you guys. So they called out this trade at 8 a.m. this morning. USD, Swiss franc, make sure you're on the 15-minute marker. I marked the time the trade was called, and then they called, this one was actually a descending wedge, even though it doesn't look like it. It is slightly a descending wedge. And there's exceptions to this. I know I told you to respect that candle at that time, but you know, let's use a little common sense. You know, we can't really draw the wedge based on that candle. So just hover over the most, it's visually common sense, so you'll start seeing it. So that's where that would go, just because the body of these candlesticks happen to line up there, and then this is the time the trade was called. And then the bottom of the wedge, perfect. It's not a perfect wedge, but you get the idea. Okay, great. So we patiently waited and it broke out. It broke out. So once it breaks out, what I do is I use this tool, and in this particular case, we're gonna use long, because long means buy and short means sell, okay? So the long position tool, okay? And I would have come in, so before I use the tool, my entry would have been just about here, because this is where it broke out. I would even wait for that retracement and then just come in right here, probably. But pretty much around that region, this would be your entry. That would be your entry price. And then so this one is pretty interesting because this one doesn't have a last high that I can visually see. It doesn't have that last high. So I would probably go in, and the way I would calculate that, this might be a little more advanced, but I kind of measure the width of my wedge, and it's about 11 pips. So I feel comfortable buying 10 pips just because the width of my wedge is about 10 pips. So I can expect to see about that amount in profit. So that would be my entry, and my stop loss would be my last low. My last low is right here. This is my last low. My last low is right there. So I'm gonna put that stop loss right there. That's my stop loss. So I come into the market. So you go on your phone, you place that buy, and I'm gonna go in for my 10 pips. I have a template here, I already have it saved. I have a template here for 5 pips and a template for 10 for these kinds of scenarios where I don't have that last high or that last low. Just measure the width of your wedge and just make an average. If your wedge is about 5 pips deep, then take 5 pips profit. If your wedge is about 10, then you can feel comfortable taking about 10. Again, it's just something that only practice will teach. Okay, and whoever went in made their 10 pips. In fact, for those of you who use the trailing stop loss, by now you could have made 25 pips if you kept following that trend. And in this particular case, the Bollinger Band didn't confirm, but I would have still taken it just because the wedge was so clear to me. It was so clear to me, I would have still taken it. So 25 pips, 15 pips, 25, 35, 4. So like just by 3 or 4 examples that I've shown you guys, we've already caught like 40 pips. So I'm gonna end this part of the training. I wanted to open this up for questions because there's a lot of questions. So I'm gonna go ahead and start answering questions. Is that okay? Mike, is that okay?
Yeah, totally. I was literally going to tell you that as well. I think we have like 19 questions for you. So
Okay,
probably, yeah, dive into them.
awesome. Okay, all right, let's see. Let me go in order. Okay, can you please review several different wedge markups? Okay, we did that. Bollinger Bands, RSI, yes, start playing around with your indicators. And the way I learned indicators, I go into YouTube and I YouTube Bollinger Band Forex indicator. Look for a 3 little minute video. It will explain to you how it works. Do the same with RSI. Do the same with stochastic. Learn what these things do because they really help you forecast the future. So yeah, stop loss should be your last low or your last high, depending on if you're buying or you're selling. And of course, there's exceptions to this. It's not always going to be there, but follow the guidelines and you should be able to figure it out. You can use any broker you want, but I personally, I'm looking for that leverage. I want that leverage. We're kind of scalping here. This is kind of like a scalping strategy if you think about it. So since we're moving so fast in the market, I personally am using Trader's Way because I have that 1,000 leverage. But again, you can use any broker you want. I know some people use CoinX, so
Yeah, Catalina, real quick, just on the broker, I think another good thing, regarding brokers is also just paying attention to the spreads,
yeah,
because we're catching such small pip amount in comparison with the compass. It's always good to be aware of the amount of the spread on each pair that we're utilizing.
exactly. The time zone. Yeah, basically on your trading view, just make sure you are on your correct time zone. Same thing as Forex Factory. I get it all the time where people just are completely off and it's only because their time zone's off. A buy, your stop loss correctly. Okay. Okay, sometimes the alert comes in as ascending when it's actually descending. And why is that? Yes, I've noticed that. And sometimes also what will happen is maybe like in an hour, the alert system will spit out another trade with that exact pair on the opposite direction. So what I do is I disregard the previous alert for that same pair because the AI is picking something up. It's picking up a new pattern. So what I do notice is that when it does pick up that new pattern, disregard the previous alert. Usually it's not even 100% clear or it's still like in transition before it activates. So, I still draw it even though it says descending or ascending. I still made money on trades that didn't necessarily, even though it says it's descending and when you draw it looks ascending, I'll still take it. If it looks clear to me, I'll take it. And again, like I said, don't be scared to walk away. If it doesn't look clear, just don't take it. Just walk away and walk away happy because I rather take the 10 best trades than randomly take all the trades during the day because it wasn't designed for you to take all of them.
Yeah, Catalina, and if you don't mind me jumping in, I think what you said, 100%, that's something that, in my experience, a big thing I think a lot of people have in trading in general, they have like FOMO, like the fear of missing out. And that's a big misconception because especially once you really kind of dive into this and you start learning more and more about the markets, you start to realize that like less is not more, right? It's about being selective. It's about the probability factors. Like you also said, it's Forex is never 100%. You always have to calculate. There's going to be losses involved. And so knowing that going in, I think, obviously being selective, taking high probability setups, and being able to mitigate your risk are very, very key factors. And finally, just touching, like you said, I think if you have and correct me if you disagree, but if you have an alert, you get an alert, you hop on the chart, and you like, let's say you draw your wedge out, you identify the pattern, and it looks very clean. It's very precise to you, and maybe a different like something happens. If you stick to your markup and you just follow your rules, mitigate your losses, things along those lines, it usually works out.
Exactly. Someone asked, how do you use a trailing stop loss? So, in this particular example, so once you're in profit and you see that you're already in that blue zone, green zone, I move this stop loss all the way to my lowest peak in my green zone possible, probably like around here. And that way you mitigate that possibility of even, you're only in profit zone. You can't lose. So you can definitely do that. That's how you would do it. So your new stop loss would change. You just copy paste that number right there. Are you waiting for the candlestick to close before you enter once you, so that's a good question. Are you waiting for the candlestick to close before you enter once you see it breaking out of the trend? So because we are using 3 confirmations, It depends. Sometimes, like if I see that the candlestick's very long and it's obvious, I'll just go in. But if I see that, depending on the time and the candlestick is about to close out and a new candlestick's about to form, I'll probably wait for that. Usually what it does, it retraces. So I'll wait for that retracement and then I'll go in. So, definitely that's something that only you only be able to develop a keen eye for that with practice. So, how do you take the entry as soon as it breaks out? Just go in your MetaTrader 4 app and look for the pair and market execution, buy or sell. It's simple. Then after you come in and add that stop loss and take profit. Doesn't it have the possibility of reversing? It does, and that's why we use a stop loss. So you protect yourself. So they're asking if it's possible for it to reverse. So, that's the reason we're using these parameters to protect our losses. How do you draw them on your phone or your computer? Trading View, download Trading View on your phone. You can also do it on the MetaTrader 4 app. I just think it's a little more difficult to draw these lines with your fingers. So that's why I like to do it on the computer. I get better entry and more accurate entry and exit points when I draw them out on the computer. Trading View is free. Okay. Lot size determination, you'll see it in the PDF. Use that formula, 5% of your account per trade, no more than 5 trades. Okay. We talked about that. So the parameters on the indicators, feel free to screenshot. These are the ones that I use. You could screenshot right now the screen. I'm using Bollinger Bands, RSI, stochastic. I mean, this is what works for me, but there's tons of indicators. As you can see, there is tons of indicators. You can be here all day. So RSI, just look for that line to cross over the red back down into my blue zone, and that's how I know. So basically here what I look at is if it's above the red, we're typically gonna sell. If it's below the blue, it's typically gonna buy. And you can find really cool little short YouTube videos explaining these indicators. Brands and hands information for you. Okay. So someone's recommending IC Markets. It has a small spread, even though it's B broker. Okay, so yeah, make sure you're, like Mike said, we're looking at those spreads. And let's see, what percentage of the time do you use a trailing stop loss? I mean, you're trading live, so you should, implement that in your strategy always if you can. Yeah, I think we pretty much answered every single question yeah, I think that concludes all the questions.
Awesome. Awesome. Well, I mean, kind of perfect timing because we're kind of coming to the end of the webinar anyway. So yeah, definitely took up the majority of the time. And then Catalina, let me ask you how if people want the PDF, how would they get the PDF?
I'm going to post it in the Facebook right after this and the recording of the call. So I'll just look out for it on the Facebook.
All right, perfect. Well, you guys heard it. It's going to be all posted in the Facebook group, the PDF with the recording. And then I'm sure, I don't want to volunteer you, but I'm sure obviously if people have questions, Catalina is one of the top leaders. So, she probably makes herself available, but that's at the same time, I'm sure she's really busy. So, I mean, you could,
Yeah,
we'll be here though every Friday as well. You guys can bring some of this, and we go over the compass every Friday, Catalina. So if you have
awesome.
other days you want to come through, come on and go more in depth, anything like that, just contact me and we can make that happen.
Absolutely, absolutely. Yeah, and I have a really cool Instagram where it's a crypto and Forex guide. Follow me,
Oh.
Crypto Boss Babe. It's just a fun guide to the Forex and crypto market. So definitely,
It's crypto boss babe. How do
Yeah.
you is any like hyphens or anything? I'm gonna
No.
shout it out to everybody.
Yeah. It just straight. Yeah.
Okay.
Crypto boss babe.
All right. Well, yeah, I'm just sending it so everyone has that if they want to follow
Yeah.
you on Instagram.
And then my regular Instagram is Catalina Naranjo TV, but you'll see it on my Crypto Boss Babe page. But follow both of my pages, and my crypto page is really cool. I'll post some funny memes on there sometimes from time to time too. So
Awesome. Awesome. Well, that sounds great. I'll shoot you the follow for sure as well. I like keeping up with all that stuff. But anyways, it was awesome having you on, Catalina. I know a lot of people got a lot of different value from this, and it's cool, because you definitely take a much different approach than myself, but we follow a lot of the same fundamental concepts. And I think that's really cool how, people are, being able to utilize the products we have in different ways that really suit them and appeal to, number one, their trading style, and number two, their lifestyle, and I think that's a key thing because not everyone has the same type of time of day as others. So being able to just expose people to different types of approaches and different ways that people are having success, I think it's phenomenal. So it was awesome. I want to thank you again for taking your time and hopping on here and sharing all of this with us. And I know a lot of people are going to gain a lot from it. So thank you
yes,
so much. And
thank
everyone
you,
who,
thank you.
yeah. Everyone who hopped on, thanks as well. We know, these Forex Fridays are awesome. We love just connecting with everybody, and helping out any way we can. So that's what I think, our, what we're designed to do as humans. You have value and you share it, with as many people as possible. It just brings more, I don't know, just more joy in general to people. So anyways, guys, we, every Friday, again, we'll be hosting this next week, same time on Friday. We'll probably be covering a lot more of just over the ringer next week. But we will do some, some compass examples. So tune in for next Friday. Everyone have a great weekend, and looking forward to another trading week.
Thank you. Good night. Goodbye, guys.